Good afternoon, everybody, and welcome to another analysis of Bitcoin as we just go through this recent pump that occurred this morning. So, here we are. Let's just reflect on where we were yesterday and what our bias was. Now, we had this bias set in that we were going to come, take the liquidity from here, retest this level, potentially move down to these lower wicks to absorb some liquidity to move forward to higher prices with the eventuation of mitigating this area and eventually moving up into the higher areas of our liquidity levels. Now, what we've got, just to recap, we do have this downtrend which has a bullish side and a bearish side. So basically we've got two standard deviations where it overextends from the mean of the trend line that is formed through the middle. So we're not trading off the middle, however we do lean to a bearish bias on the upper side of the trend line and a bullish side on the bottom side of the trend line. It took a second. But what we've got is we've got that macro, which is by macro, it's still micro. It's 5 days older in this trend line up. So we're on the bullish side of this bullish trend line. We're on the bullish side of this bearish trend line, which gives us a more inclination to go bullish. However, I did want to see a little bit further mitigation to come down. Now, where this arrow was, I did have a short in play, but I also, now that I've said that, I also had one small order in here which was set up right in the middle of this liquidity level to see how price would react and come through, knowing full well that we were on this larger bullish trend line. I was aware that we could come a little bit deeper, but I did have a position long here, a position short here, but a shorter take profit target because I was entering into a buy side liquidity of a downtrend, a buy side liquidity of an uptrend, and so I was targeting this low as a quick profit, and then move back up either from a lower point and take more bullish orders, and then move towards this target. However, let's just remove the back test and see how price has reacted today. So here we are. These were our biases. We came down, we mitigated this area, so that gave me a positive trade. Price didn't come down to retest these levels. There was enough liquidity in here to move up, mitigate these hourly liquidity retest levels, and we've come straight up into this point of interest that we've been watching ever since back here. Ever since Sunday, and actually ever since Friday we set this level up. And we've come up on Tuesday and we've mitigated this level already, which is fantastic. What's also to note is that we have extended outside of the bearish 2 standard deviation trend line. We have moved up into the bearish side of the bullish trend line, which means that we are coming to a level of exhaustion. So while we've come through, let's just clean up these because these have all been mitigated. Before I wipe it out, these have been mitigated with wicks, which means that they are all done and dusted. We've got this top here which is coming through as a potential retest of support at 60,270, but it is a minor support, so we don't know whether it's going to sit there and fold, but people will have their stop losses below there. Down here we've got liquidity retest in the bullish trend line buy zone. So now it's become a retest. All these levels have been thoroughly mitigated, which cleans that right out. So that makes a nice big, I just got rid of the uptrend. That's okay. So what we've got is we've got this beautiful clear out where we've got no wicks to worry about, or very minimal wicks, sorry. So that's a retest in there as well. And we've got one wick down here as just a normal retest. Let's clear this out too, because this is all done and dusted as well. I can draw those in later, so that's fine. Alright, so let's just put in our new liquidity levels. Down to there. And we're down to there. Perfect, so we've got some nice even levels that are coming through. Nothing is too congested, it's all actually pretty even. So it's going to be interesting to see as price comes up. Up here we haven't got any liquidity levels. Nope, they've all been mitigated. So we've got this one on the top. Oh, actually, let's put that one in. We haven't done that one. Alright, that one's still unconfirmed because this current candle actually completes in 5 minutes. So that, should it not break the high, that will be an hourly liquidity wick to keep in mind. Alright, so what we're seeing here is that we've got real evenly spaced liquidity wicks to the downside. We've got a relatively open side, so we've got liquidity wick and daily liquidity wicks above. So there's quite an open gap above here. So it's going to be interesting to see. This is quite a fresh air gap. So this is going to be a level to watch at 61,830. But then we're also going to see a little bit of support in the meantime, in the short term, at 60,250. But we also need to bear in mind that where we have a fast up, there is always a fast down. Fast moves up equal fast moves down. It always occurs that way. So what we've got is a good chance where we are, for the next few hours at least, we're just going to bounce around here, maybe move higher. I don't think we're going to get much support across the top here. Sorry, I think we're going to get a little bit of support across the top. We may go a little higher, but we are going to move down into these lower prices only to move up further. So I think we are going to come down and liquidate this level around the 58,000, 58,100, because there is a level, there's still a lot of liquidity there. However, once I draw up these regressive channels once again, we get to see where price is going to go. So let's just draw them once again. So we've got the low of the Japanese liquidity low. Let's just get this in. Alright, here we go. Reset chart view. Whoa, too big. So we've got so that's our bullish trend line. We've come up into the bearish side, the sell side liquidity. So that's when, as we go up into this buy side, it does become an overextension of the trend line in the bullish direction. Now what we also do is we come down from the peak over here and we stretch it out to the right with an extension, and that gives us the bearish sentiment of this trend from the 9th. So this one started on the 5th. 4 days later, we reached a peak, and now we're starting to distribute. And while some are accumulating, some are distributing in their positions. And so now we've come to an extension of this downwards trend line. So we still have a point where we are going to come back into this buy zone because we are on an extension in the downtrend. We are coming up just past the mean, the average of the uptrend bull side. We are expecting, or I am expecting, that while we may still come up a little further into this area, there really isn't a lot of mitigation that needs to occur through here because it's just been wiped out through everything here. Because that all just got mitigated, that was mitigated, and then we had all those sell levels through here. They all got smoked, all got filled like a shark eating a school of fish, and now it's come down, it's pausing for a moment, and we're just going to mitigate here through a little bit. We might get up here, but we also might just bounce around and then come back through after mitigating off the few orders through here as people are swapping hands. People are expecting to go short. All the shorts just got really hurt. They just got squeezed right out. And so now we're looking at mitigating before we squeeze out the longs. Because there's no big move that's going to occur before Saturday. Before that FOMC meeting, there is no definitive trend. Everything is just going to be chopped. Everything is just going to wipe out the shorts, then wipe out the longs, then wipe out the shorts, and wipe out the longs. And we're only Tuesday, so we've still got Wednesday, Thursday, and Friday before we can actually get, come right up to that conversation starter. And that's when things are really going to start to bounce after then, over the weekend and on into the next week. So, if you're in any positions right now, I'm currently in a minor short position here. So I'm in a current short position in this area now. And I'm looking just for a short move back into this area with a target in the bullish buy zone. So that way, even if it comes into the bearish of the downtrend, that's still fine by me. So that sort of target area of 59,350 is sort of the target area I'm trying to go. I'm not trying to capture big moves. Once again, I'm only trying to capture small moves. And if you capture small moves, then you can dollar cost average in, and basically you just buy your position in. That way you're not going too crazy, but you can get good percentages on small trades. And that's what I'm all about. Short in, short out. Sorry, not short in. Short time frame in, short time frame out. Just get in, little bites. Just go fishing with the sharks. And that is how everything keeps turning over. All right, that's it for today. Thanks for tuning in, and we'll see you tomorrow and see how things play out over the night. All right, happy trading. Ciao.